What's good, everybody? Do me a favor and let me know we're up and streaming. Boom. Cool, cool. Should be live. Should be hearing me as well. If not, we got some issues. All right. Well, let's see what we get this morning. We're at a previous day high, or maybe low. Let's see. Yep, that's the previous day high there. And so we are just still pushing higher and higher. Honestly, I would expect that to continue. We're not, as we said in the market, of calling tops. We've broken out of the range from last week here on Monday. Right, so we clear that level, we start accelerating. So honestly, if we can continue to move, I would just look for higher prices until that daily swing point here that we've been kind of aiming for here. I mean, shit, we might want to make all-time highs. Who knows? If we keep pushing like that. But as of now, volume imbalance. What is this? So we have a daily volume imbalance. Label that. Daily. There you go. Got some higher time frame objectives here. Whoa, what the heck? 30 seconds till the fireworks though, so let's see what we do there. All right, we have this fair value gap here as well. So now if we're gonna do something where we go down first, usually CPI is one-sided, but if we go down first, I would look for that. If not, I expect that we continue to push for highs, to be honest. But we will see, we will see. No audio, see? That's the thing I was checking. All right, let me go. Round two? Round two any better? Hello. Aha. Bro, see? Every time I don't trust it. That's on me though, for real, because I was even asking if y'all could hear me. I should have known if no one answered. Stupid. Basically, I was saying, right, I favor higher prices. So I was just kind of labeling areas, going to start explaining that. We've just been moving higher and higher. Right, we don't expect that to really stop until there's a clear break in structure on higher time frames. And on these charts, right, there's been nothing to indicate that we want to start moving lower. So I like this fair value gap. Was labeling this if we want to go lower first. Usually CPI is one-sided, so it's just going to reach for the liquidity. So I didn't really expect that, but if CPI was to whipsaw, we would look for that. Instead, we do get a slight whipsaw, but where do we go? Perfectly into midnight, perfectly into the previous day open, right? That's a buy-side liquidity pull as well. So I'd kind of see that as our Judas swing. Would expect price to now rip into buy-side objectives. Buy-side objective. Seeing this, especially because we clear all the sell side. Let's use the 1 minute. Wouldn't really want to see anything less than consequent encroachment of the wick if we were going to continue to print higher anyways. Right? Like if we were to close back under this, we may just start wandering back into the midnight, into the new day opening gap, and want to return for the set of equal lows we left behind here. So I'd watch that as my flip point. We held at that fair value gap, so we got into our kind of higher time frame objective. Even though we didn't get into the daily volume imbalance, that's fine. We have this current set of daily volume imbalances. No fair value gaps along the way. I was trying to find one here on the lower time frames, but on that move up, all wick. Oh, not 5 minutes. Okay, 5 seconds got something. 5 minute or 5 second volume imbalance right there. Attention here is on this wick. I just want to see what we do when we interact with that, and then, oh, as usual, probably just step away for a little bit. I just really want to see what we do after the opening. Not as aggressive as the last one. We've obviously been moving higher the past few weeks, though, so that would make sense. But last CPI, we absolutely catapulted. Whereas this one, right, a little more, yeah, it was whipsaw, we'll see. We did get into our objective, but we'll see if we want to actually overtake. Like, if we overtake this wick, that might set the stage for a potential run lower. Not in the long term, but right back into higher time frame now. So this is that 1 hour fair value gap that we had. So we could say in the short term, if we want to come lower, right, we could return into these higher time frame objectives before still continuing to run higher. Well, that's actually the 4 hour. Yep, 4 hour, 4 hour. Get that right. 4 hours. There, 1 hour inside. Ah, look at that. So swing low just. Oh wait, is that on the level? Okay, yep. So on the 4 hour fair value gap, notice we have right sell side liquidity there. Actually, a trade we took in yesterday, so that'd be a good target. Now, attack. Back into midnight. Let's say we close under this fair value gap, or this consequent encroachment here. Especially leaving behind premiums. 830 level. And look at this fair value gap here. I mean, really both. Right, there's two in this case. It'd be ideal if we actually held this one. But we can get up into this higher one here. Still pretty early on in the news cycle. I'm just kind of looking at it. We have this volume imbalance here, 30 seconds, so pretty small chart. I want to see how the 1 minute does with that consequent encroachment. If we get right back above it, we could potentially come back into this fair value gap right here. But if we can stay below that level, as we mentioned, hold this one preferably because on that 30-second, that volume imbalance is there. Here. We'll see what that does. Already pretty uncharacteristic, though, of a typical CPI event. Which might mean we might play around here for a little bit. Let's see, 5 minute. Honestly, still holding that daily volume imbalance, however. 15 hour. Notice how we accumulate right on that level. Just in case. Notice how we start using that as support, though. So kind of already not showing signs that we would like to see for straight bearish order flow. Wicked into the higher fair value gap. See if we can't overtake this. As we mentioned, 30-second chart, so rather small time frame. Don't want to get lost on that 30-second. We held the actual, did that candle get above? Don't think it did, but yeah, so we hold the actual fair value gap still. Although we've pressed up against the high of it pretty aggressively. So we'll see if we can keep holding that bearish volume imbalance. So wicking into this one, potentially returning lower if we want to go lower. And Q did run its lows on that run lower at the opening. So at these equal lows here in ES, NQ actually ran those. And then it ran this low as well. So two forms there, interesting. Because it ran this low, and then it creates this low. The low that ran that low also got ran. So low here. I'd want to see if ES would want to catch up, to be honest. So this is more of an instance where wouldn't really want to see the SMT hold if we want to get lower, right? Run out the equal lows. Because if we do start holding, then we might just consolidate in here. Back into consequent encroachment. Kind of what we'd want to see, though. So from that wick, or from that fair value gap, the higher one. If we now close, let's say, underneath this fair value gap, so this candle almost does. If this candle can, we're also closing under consequent encroachment. Should be good for that run lower. Ooh, shoot. Nice. Cool. Okay. So we actually hold that fair value gap. We do wick into the higher one. Like we mentioned, have to give that room, especially because we have that open gap there. But this lower one here actually holds the bodies. So that's nice to see. Back under consequent encroachment. 30-second fair value gap. That'd have been a nice little setup too, right there. I had a limit set. I've removed it. I was gonna try to just get this. I wanted 2.5. This whole one was a little large for my liking, and I wasn't sure if we would actually want to refill it all the way. So this is an instance where I wasn't really comfortable just putting the stop there. Well, it would have worked out, right? But oh well. For me, I had it back at the 830. So looking for a deeper retracement, allow kind of a better entry to target the low here. Fall short of it. At this point, I was looking at that 30-second fair value gap in here. Never get back into it. It's 1 minute as well. Sell side 1 back into previous day high. Looking for that sell side. Ideally, this sell side here. Right, paired with new day opening gap. Nope, not partials. Just sell side. Volume imbalance, daily volume imbalance close. Let's just referencing these levels. Once we get sell side, I'll probably chill out, step away for a little bit. Usually I kind of look for one trade. I missed it, so I'll just wait till the opening. Let's see what indication. I mean, no, it's fine. In my mind, one of these three levels holds. This little cluster. Because a return to this fair value gap would be nice. But wouldn't be surprised if we didn't actually get up in there. Instead, use this up close candle. And with a body actually close either in that daily volume imbalance midnight level or the previous day's high. No, sadly. There will always be another entry. Unfortunate, sure. But we ain't sad. Oh, look at that. So we do close right on that daily volume imbalance, which means we should see expansion lower. There it is. Beautiful. Let's just see where this closes, just for precision's sake. But it would be nice to kind of close right on that level. That'd be an indication that we don't really want to continue lower. Say we break through that, though. Leave a fair value gap. But nice. And here, right, we were holding a 30-second fair value gap. So it's an up close candle, but now if you understand lower time frames, look at that. Hit that 30-second perfectly, translating to a 1 minute return into the up close. Into the new day opening gap. Let's see if we close there. Close around the low. Okay. So now, drag that out. Let's say we leave a fair value gap right there. Kind of anticipate fair value gaps, right? Say we leave that, then we expect continuation. Lower prices. I mean, maybe into this. If we want to go higher, I really would prefer something like that. Coming back into a higher time frame discount first. We're putting in a breaker here. So in the short term, breaker could hold us, YouTube model as well. Back into that sell side. I like that idea. So I'd look for lower prices, especially if we leave that fair value gap here. Because it looks like we will. Yeah, I like that actually. I like this here. I might throw a contract in on this. Yeah, might as well. We'll give it one shot. Oh my gosh. That's what you get for hesitating. Wanted the limit on here, getting about a handle lower than what we would have liked. But now that I'm in here, I honestly just set or forget this 1K. So we're going to aim for wicking that. Yeah, low risk. We'll see if that holds us. I'm going to leave it here where it is. That's just 5 handles. So we'll be fine with that. Went with one contract, really nothing there at all. Keeping it light since we're still following that announcement. Yeah, we'll leave this here up. We'll actually just bounce for now. So we're going to go ahead and get out of here. We'll be back as usual. Be back. Whoa, whoa, whoa. We'll say what? 9:29. 9. Beep. Wish I could type. Brother, too early to be typing. My fingers don't work. 9:30. Yeah, go chill out. Get something to grub on. And then we'll see what the rest of the morning gives. If we close above this fair value gap, though, I might actually just close that. If we don't get stopped anyways. So we'll give it 1 second. I'm not trying to hold all this. Because we're kind of wicking on higher time frames, so we could have a possibility of retracing into the range. If we cannot hold, this is what I'm really using here. I'm looking at this breaker here as well. Oh, we did hold it. All right, then. At this point, though, we might cut that wrist to the high. Nah. It's only one contract. That's nothing. We'll let it play fully. Full stop, full TP. We AFK until 9:30. Yeah, it's right here. That new day opening gap. So if we break these levels right, really using these levels here. I wanted to get the higher entry, but I market ordered it. So rather sloppy. But I'm looking at these levels here as the daily volume imbalance, old daily high, and the midnight. To where if we want to go lower, shouldn't really break up and through that in the short term. So we'll give that some room. If we get above it, oh well. Say you guys are sticking around kind of the whole time. If we do get above that, and potentially back into here. I like that 8:30 level again. Because on this original stab, right, just institutional order flow entry. So we barely wick into it, leaving consequent encroachment. So we left a lot of that fair value gap there intact. I like how consequent encroachment's kind of aligned with the 8:30 level. So if we do start wanting to rally higher, we could look for that area as a nice inefficiency target. But until then, yeah, we won't be gone too long. So be safe. And we're talking about, what time is it even? Cool. Yeah, so we're talking about half an hour or so. I'll catch up with y'all then. What's good, everybody? We back. Can you hear me, hopefully? Hello? Double check. Hello, 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 hello. It's me. It's me. Hell yeah. Well, cool. Nice to see that plays out just in time. Just closed here at the sell side, to be honest. I had moved it into the 1 hour fair value gap. But, same old, same old. Either way, close out on that low. 930's coming around. Let's see if we want to continue. So we have volume imbalance here. Nice. So sell side already. Like we say, on days like this, we don't really expect the 930 opening to offer too much volatility. We really just expect price to continue doing what it's been doing. Now that we've hit that, though, well, inside the 4, inside the 1. And no bias for me, honestly. Let's see. Up and through this fair value gap, I like the idea of new week opening gap again. Aggressively under 1 hour consequent encroachment makes me think potentially 4 hour consequent encroachment. But let us see. Let's see. Let's see. I don't know if we'll chill. I'm trying to think what we want to do. I wanted to do a PM stream, but I'm going to be busy this afternoon, so we might have to sit around here this morning. We'll see what we get. So cleared sell side. If we get above this, potential inversion play. Okay, didn't get above it, so it doesn't manifest as of now, just holding. You'll see where we entered. If I was to move my stop, actually, we still would have been safe. But not in a rush to move stop from entry because we had this whole fair value gap here. So as you saw, I wanted to enter right on the old sell side pool. So that's what this candle is. Got a pretty brutal fill back inside new day opening gap. Retrace into midnight, daily volume imbalance, break away with a fair value gap. That fair value gap should not be violated. So stop is right above that swing point, right? Cut it in a pretty good amount. And you saw that we actually created short-term sell side, gave a retracement, kind of bait longs in here, right? Is what we would expect. People trying to go long in this, even trying to long like a bullish fair value gap in here. We understand it's just retracing back into this fair value gap, into the 1 minute as well. New day opening gap ends up holding us, and now we get that delivery into the sell side, into all these sell side objectives that we were aiming for. So we've hit the sell side already, retrace back into the fair value gap, hold that, break lower again. So at this point, we said, right, if we're underneath 1 hour, we expect 4 hour next. $15-minute volume imbalance right here that we're hitting. 46.67, just hit that. It's a 1 hour volume imbalance as well. So I'll show you that. 1 hour volume imbalance here. Boom. Wow. Didn't get the fill. I just realized I had this TradeAvate account open this whole time. That's comedy. I thought I was sharing the paper trade execution with y'all. Well, there you go. You got straight up live footage. I got my screens backwards. Oh, that's funny. Oof, no fill. That's heartbreak right there. I feel that though. I didn't get filled either, brother. That's what I'm saying, man. I wanted consequent encroachment, which is the old wick. So in a micro sense, right? Old lows acting as resistance paired with liquidity or inefficiencies, excuse me. And yeah, I missed that one. Unfortunate. Should have used the 1 hour consequent encroachment instead, but got greedy. There's the sell side I was looking for right there. Alrighty. Welp. Maybe we get another chance. So this is a 1 hour volume imbalance paired with a 1 minute. As we've left. Let's try something like this then. Let's say that this is as high as we go here with this entry. Maybe aim for a new week opening gap if we're going to get underneath the 4 hour fair value gap. If we're very bearish. I was watching the 855 candle. Let's see what you're talking about. I was watching the 855. 855 up here. 855. A buyer there had several attempts. When there was finally a close below, we broke. Okay, a buyer there had several attempts. When there was finally a close below, we broke. When retraced back into mid of 855 candle, next leg down. All right, sorry, I'm just trying to understand. One second. Okay. So you're watching 855. When you say when there was finally a close, yeah, this candle right here. So you're saying when there was finally a close below, we broke. So what do you mean when there was finally a close below this candle here? We broke. Then retrace back into mid. Okay, then I think, yeah. I think what you're referring to is the mitigation block, John. I'll explain it, see if that's kind of what you're thinking, right? So from here, we have a high. We create a low. We have a Ferrier swing here, right? So we have a high, a low, and now a lower high. When we break that low with displacement, which is here, it's important that we leave that fair value gap, right? That's important. Closing underneath as we leave that fair value gap, that kind of signifies it. Last down close candles become a mitigation block. Right, so different from a breaker we often speak of. Breaker would have been high, low, higher high, then broken. But this one here's a mitigation block because we go high, low, lower high, right? Broken. Same candles though, so we could use all of these, but yeah, let's say we refine it like this. Okay. To the last down close candle before the move lower. Well, now we have that fair value gap aligned with that here. And then you see we actually hold that with the bodies. So we're holding the fair value gap, but it's also the low of the breaker, wicking higher into the fair value or the up close candle. Break lower. Yep. So yeah, that's what we just covered there. Mitigation block. Basically the same mechanics as a breaker, except the breaker will run the high or the mitigation block will not run a high. Vice versa, right? So the breaker is basically running a swing point where the mitigation block fails to run a swing point. One extra thing that is cool to note is that ideally, right, if everything is aligned and the price is moving as we would expect, breaker blocks will turn, or not turn into, breaker blocks will lead to mitigation blocks. Right, so the breaker block should always be created, followed by the mitigation block formation. Because if we think about it, right, just in terms of simple structure, we'll use like, so we have a low, a high, a low that gets broken. So that's our bullish breaker. Right, we would expect that to hold, which means we're creating a swing low to then break structure again, which would now create that mitigation block. So in very high probability conditions, those two will form together often. Miss our entry here. That stuff gets me so salty, if I'm being honest. I'm just like, brother, it's just nice to catch swing highs, you know? But that's, sometimes you gotta suffer with the precision. You don't get tapped in on the spread. Probably won't get this hit now at this point. We never close below the 4 hour. I mean, I guess we could probably leave this here, but do we leave an inefficiency on a 2 minute? We'll leave this here. Paper traded, right? So we're gonna see if we want to continue through the 4 hour. If this was an actual count here, I would actually just remove this because we could hold off the 4 hour low. Like say we hold this low, create a swing low, and accelerate into our target or into our entry, excuse me. We may actually be creating a protected low here. Right? Because kind of look on a lower time frame. There's that breaker potentially that we'll talk about. We have a lower low that might get broken. Low, high, low, potentially might break here. Da, 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 da. What's funny? What's funny? Did I do something fucked up? Can you hear my cats? I was like, you probably hear my. Oh, the salt. Yeah. I'm telling you, brother. Saltine. That's the only emotion I be feeling. Saltiness. Not sadness. No FOMO. And it's not even like really upsetness. It's just like, damn, that would have been a perfect entry. You know what I mean? But nah. Means we gotta wait for the next. On to the next. Whoa. New week opening gap. This is a new week opening gap here. You're good, brother. More importantly, or more specifically, new week opening gap from. Oh, we're back. Hold up. Beep. Maybe. Load indicator. Oh, it's this week's actually. Okay. So yeah, so it's this week's new week opening gap. Whoa. Hold that. Leaving the 1 hour. Don't really need that. Equal lows. Let's see. If we keep these equal lows and go higher, we'll enter there still. What is PDA? What? Do you see that somewhere on my chart? I'm like, I don't know what that is, honestly. EHPDA. PD array, I'm guessing, is PDA. It is your ICT indicator. I don't know then. It depends. What indicator do you have? I couldn't tell you what that means. I'm sure it means PD array, but I couldn't tell you what the EH stands for, brother. Extra high. Extra every. Yeah, I don't know. $57.5 is that EHPDA. I could not actually tell you what that means. For some reason, I have that level as well. I don't know what it stands for. Oh, it's just low. I was like, what's this? I mean, the high of this fair value gap is that. Of the 1 hour fair value gap. EHPDA. That's got me bam buzzled. Ah, there you go. It's the event horizon. I was like, what the hell does that stand for? There you go, Richard. See? My boy Richard Clutch. The event horizon is just the consequent encroachment, right? It's the midpoint of two new week opening gaps. So like this new week opening gap here and this new week opening gap here, if I was to take the midpoint of that, that's the event horizon. So that's probably what it has labeled for you. Oh, yeah. 50. Yeah. I just couldn't understand what the damn labels meant. But yeah, not a bad. It's basically, yeah, just another, right, the midpoint of new week opening gap. So something that you always notice is that the midpoint of anything is always important, right? Doesn't matter what it is. Breaker, order block, fair value gap, new week opening gap, right? Set of new week opening gaps, volume imbalance. It'll always be a key level. So let's see if this entry works out. So we left those equal lows. I'm worried that we might just hold at this volume imbalance here and not give us our entry, which would be unfortunate. Matter of fact, we'll use a lower fair value gap here like this, or volume imbalance. So we'll go there. Into now the triple stack. All right, so we're looking at these three levels here. I stop basically above this swing point. Wouldn't want to see that if we're going to go lower. We've given up the 4 hour consequent encroachment, but because we had this and we had to return into that, this is where we kind of give it that one candle opportunity. So that's one of these scenarios now, to where I would want to see after hitting this volume imbalance, this candle overtake that 4 hour again. Because if we start using it as support to push through the volume imbalance, higher likelihood of running for highs, or at least running back into this inefficiency, potentially back into the high of the 4 hour now. Because as we mentioned, right, we could kind of hold from this 4 hour low. We've moved a significant amount, I would say, lower since that CPI announcement. So this 4 hour fair value gap, because it's a higher time frame POI could easily hold us here, give us now a retracement back into the range. I just like the idea that we have equal lows here. So even if we do want to go run higher, maybe one more run lower. But now that I think about it, we probably have, was my chart? If I could pull up my damn charts. Okay, yep. So NQ ran that low, which is kind of what I was thinking. Low here. So lower low, we close above the volume imbalance, which means we close most of the position. Weep. Breaking through the PD arrays, the premiums we would expect. What we could do though, really, just because we're trading this, let's try this out. Nah. Oh, like we could try to turtle soup at this high, expecting that the high of that 4-hour fair value gap will hold us. Maybe. I feel like we could use that. I'm gonna go right. I'm just gonna go right above this, just to see if we want to use that fair value gap. So larger than I'd usually keep it, but we'll see what we get. See if we go up and through. Up and through. Oh no, we do not. Yeah, I like that as turtle soup, kind of. Is Vin in here? Let's see, Vin. Are you in here, my dog? You could ask yesterday about the turtle soup. We can kind of talk about it now because at this point I won't be looking for too much entries, but I'm not someone that uses the turtle soup too often for entries, to be honest. Just because, as Michael said himself, it requires a pretty significant understanding of, we'll say, like your anticipation skill set, which I can kind of anticipate it, but I like to wait for confirmation. Where if you're turtle soup, and it's a lot more trust without confirmation. But usually, right, the scenarios that they're going to form, more often than not, they form when we're bearish. So in a bearish marketplace, right, they will form near swing highs that we've kind of engineered. So like, let's say we have swing highs like this with higher time frame PD arrays. When order flow was bearish and we have existing inefficiencies, we would expect any run on highs to be met with a rejection lower to continue the trend, right? If that makes sense. So like if there is a fair value gap in here, we would expect that to hold us as we run these highs and break lower. So kind of like the one we mentioned a few days ago, we can even use this in the short term as a little baby example. All right, so let's say we wanted to turtle soup at this swing point. This is one where I would feel comfortable doing that because if we notice, right, we have other PD arrays that can back up this high and stop price from continuing higher. So we still have this fair value gap here. Right, we have like a volume imbalance. So if I was to actually do this, I would turtle soup that high and my stop would be above a swing point. So that swing point should protect us if we're actually bearish, right? We shouldn't be breaking through highs. So as we run internal range liquidity, we can enter on a run of those stops, understanding that we have, right, a fair value gap. We have an old daily low So another PD array, right? We have an original low here and the wick broken through, so it would be PR. So if we're trying to use turtle soups, we really have to have other confluing PD arrays, right? If that makes sense. You don't ever want to really just be blindly in here trying to short highs or buy lows. So like now, honestly, in the reverse scenario, let's look at this. Look at these equal lows here. And let's see what's below it. Okay. So if we notice on this 1 hour chart, there's a volume imbalance here. That's perfectly aligned with these equal lows. So now let's kind of wander through that. Let's see, 15, same thing. We have that fair value gap, 5. No real inefficiencies here. So I'm just going down the time frames, looking to see if there's any inefficiencies aligned with it. Swing low. Okay. So not seeing too much. We have this one. New wick opening gap. I like that. So let's say in theory that we came back down to start running into this low here. So kind of like we spoke about the turtle soup opportunity here, this would be an opportunity to long one, right? A potential setup. We have the equal lows. We've obviously moved a tremendous amount lower. And we can kind of expect after running lows, right, some type of retracement. So with the turtle soups, you don't even really need to catch full moves to target opposing liquidity because you're getting in at pretty good levels, right? You can honestly target like internal range. But let's say that you were trying to turtle soup this. This would be an instance where we can look to do that because we have sell-side liquidity here that can be ran. So we're picking up stops, picking up liquidity. We have a higher time frame volume imbalance underneath that can offer us support. And now we have our new week opening gap here as well. Right, so say we were to wick through this, right? You can try something to where you go underneath the new week opening gap, expecting that this level should hold if we were going to break through that. I'm kind of expecting a return back into the range. So once again, turtle soup for the opposite direction. I would like this a lot better if price was already bullish, if that makes sense. So it's always best to try to enter, if you're going to use that turtle soup, to enter in the general direction of order flow. So because this one here, and we saw, what is that? Oh, I saw stop. I was like, what is that? But in this instance here, even though it can kind of, we label it as a potential turtle soup, I wouldn't feel as confident because price has already shown that it's actually moving bearishly. So there's a higher likelihood if we were to hold from up here and start moving lower that we actually go through that and continue delivering bearish, if that makes sense. Whereas like, let's say that we were moving higher, right? Kind of in theory here, but we are moving higher, then we create equal lows like this. Then we're here. This would be a turtle soup I would trust a lot more because order flow is bullish. So as we run those stops, we have a higher likelihood of holding from the established discounts in here to continue in that direction. But all in all, like I mentioned, I'm not someone who personally uses them too much. If they're very obvious, and like I said, there has to meet a lot of conditions for it to be obvious to me. We have to be in the given order flow. We have to have an established liquidity point, and we have to have multiple PD arrays that can now, right, support that liquidity point if we run it. In those instances, I'll look to do it. But usually, if I'm anticipating a turtle soup, I'll wait for the actual confirmation. Like if I wanted to see a turtle soup here, I'd wait for it to get ran to break above, and then I would just enter using the classic entry techniques we have. In my opinion, yes, they're best when trading in the direction of daily bias. Or, okay, I guess I should give a caveat. If we're in a consolidating market, they could be pretty good too. So that's the last one we shared. To where if we're in a market that is, let's say, ranging, right? We have created a high and a low, and now we're ranging within that. Something like this. If we are to run external range within that, that's a good opportunity to turtle soup because more than likely, right, we're going to return into the range, or especially if we're seek and destroying. Now, as we clear this low, another opportunity, right? So seek and destroy is perfect for turtle soups. But you need to understand when we're in that, and not many people do. So that's why if you can understand when we're in a consolidating market, that just gives you an advantage right there. For sure. And time plays a big factor too. Right, you're starting to tie it all together now. So like, let's say we're heading into 930 and we create some type of, right, we're already predetermined bearish. We're moving lower. We're heading into 930. We're consolidating here. We're engineering highs. We have an untouched inefficiency in here. I would fully expect turtle soup, Judah swing to run out the highs, break structure, continue in that given direction. Right, so that's a possible Judah swing entry. Obviously, flip that completely for bullish prices. I wonder if I can. Can I rotate it? Oh no. So that's one opportunity, as we already mentioned, right? If we're in a predetermined range already, so this is the range we're in, and now we're consolidating within that range. Running these highs right here can be seen as an opportunity, right? Running lows. That'd be another scenario as we run kind of external range within the larger grand scope of things. Another one, right? We could say this is like a daily objective or something here. So obviously it's a 1 minute, but in terms of us thinking, right? Say it's a daily objective on lower time frames. We're moving into that objective 3 driving it. I actually don't mind third drive turtle souping that if we're already expecting this is going to be an area where price will stall and reverse, because now, right, to at least target the original 3 drives. So that's a turtle soup opportunity there. Trying to think of all the potential scenarios. It's really a lot, but it requires a great deal of anticipation, right? So you have to be able to understand market narrative, because if you're buying tops and selling lows, that's pretty elite. That's Michael level, right? That's like Michael's trades. But he's got 30 plus years of experience, so give me another 5, I'm sure I'm there. Look, let's say more of a case study here. I kind of want to go to a 15-second, because we were just talking about the seek. Well, that's not a 15-second. We were talking about the seek and destroy. So in here, right, we create a high, a low, a higher high, a lower low, a higher high. So if we were going to continue that seek and destroy type of nature, right, which we obviously break higher here, but in the seek and destroy market, you would try to sell the highs, buy the lows. Right, so as we clear highs, we run lower. As we break lows, right, as we clear highs here, obviously we might go higher, but we'll see, because we're kind of playing around this original fair value gap. We'll probably wrap the stream up here shortly though, but ICT is crazy. Yeah, he is crazy. He's a mentor of traders. I mean, that's a good way to put it. I'll give you that. Your mentor's mentor, he said. My thing is, there's a lot of people that don't even know him, right? So it's tough to say that. There's a lot of people that have success without even finding him. I will say, though, I do think he is second to none as far as pure price, right? Pure what's happening in price. How do we anticipate where it's going to go and why? That's the biggest thing, the why. A lot of people can kind of say, oh yeah, price should go up here, price should go down here, but why? And that's really what I wanted to know. And I don't think anyone explains it better than he can. Gonna backtest some, especially in Seek and Destroy. Bet, yeah, that'll be good. Right, as soon as you can kind of understand when that Seek and Destroy, turtle soups become amazing. Which I wonder if we can even point out some. Let's see if we go back a little bit. I mean, the crazy thing is, even in higher time frame sense, we can kind of do it. Like this is that consolidating range, right? So when we get to the extremes of the range, highs, sell back into the range. Obviously, we never clear that low. But I want to find like a 1 minute scenario. Might not be any. Okay. No, so here's one actually right here. It's like this from last Tuesday, okay? We're obviously still in that consolidation. We're just kind of moving back and forth between this high and this low. So we're in this consolidation range. If we were to pull that up and we expect to kind of stay within that, we would expect price to be near equilibrium more often than not. Whatever. High, low, slow. Here's equilibrium. So we hit that equilibrium, we start returning lower. We're always kind of looking for a return back to equilibrium in that consolidating market. And now you'll notice on the way lower, right, that's that 3 drives that we're speaking of here. So that 1, we create equal highs. 2, we create equal highs. 3rd drive, this is where you were turtle soup. One thing to notice that will help you understand when, look at what we're leaving behind as we're going lower. Okay, so on this first drive, we create relative equal highs here. So boom, we create buy side. We engineer that second drive. What do? Same thing, right? So we're engineering liquidity. That right there is an indication that we can use that in the future, and that price will want to attack that. Right, so as we're going lower, creating the 3 drives, we're engineering liquidity to take as we can now reverse. Within here, right, we have our mitigation blocks, so low, high, low, low, broken, breaker, followed by that mitigation. So another thing we spoke about earlier. Well, if we go low to a high to a low, that gets broken. That's the breaker formation. If we want the breaker to hold, it will immediately be followed by a mitigation block. Right, so a high, a low, a higher high. Up close candles become a mitigation block. Drag that out. So now notice, right, we have the 3 drives. That's that reversal signature. We understand we're in the consolidating market. We're going to want to obviously return to the, right, 50% quite a bit. So we're reaching the low end of that range. That's when we kind of look for turtle soups to occur. We're creating 3 drives. As we run this low, right, that would be a turtle soup scenario. So we're expecting price to hold inside of this predetermined discount here, right, our mitigation block. We have buy side liquidity that's been engineered that we can now attack. And notice we also have an untouched inefficiency. So it's leaving behind areas for price to return into once we clear these lows. And you'll see we wick it once, twice, reverse, trade up beautifully. Oh, shoot. I should have read those. My fault, fellas. Let me see. Hold up. Different chart. Interesting. Let me see what you guys see. No video. Huh, that's weird. Let me just see if I change quick, if it'll pop back up. Stop. Start. Okay. Cool. Where were we at? Did you guys even see any of this here? I was like, we can cover that again if it was frozen already. Aye. Okay, that's fair. Turtle soup though, right? This low, this entry here. Good turtle soup opportunity. And as we mentioned, we'll kind of run through it as we spoke about already. We have a discount, so this mitigation block, we can really refine it to the last highest up close in this leg right here. So notice now we have our mitigation block. This is equilibrium of the range we're within. So in consolidation market, we tend to revert to that 50%, right? That equilibrium. So as we're moving into the low end of the range, we want to see price accelerate back into that equilibrium. Well, now we're creating 3 drives as we do it, right? Lower, lower, lower. 3 drives in itself, reversal pattern. we talked about how we're engineering buy side on the way lower, which is another indication that these runs lower or false, right? We're engineering buy side to now run because we're also leaving the inefficiency. Notice that. If price really wanted to, when we ran up here, we could have hit that inefficiency. Instead, we leave it open to visit at a later time. So that's the indication that price wants to revert back into that area. So as we see this three drives forming, right, notice how on this low, we don't get into consequent encroachment of the mean threshold. Or, we don't get into the mean threshold of this mitigation block here, excuse me. So now we have engineered sell side right above a key area in a market that's already predetermined to return back into the mean. And we're engineering three drives lower. Notice what time these are formed, right? During lunch as well. So now we have equal highs during lunch hour that'll be targeted in the afternoon session. So as you run this low out, that's that turtle soup opportunity. You can use the low and then you use whatever discount that's over here, right? The kind of higher time frame discount that is supporting us. That is always where I would have my stop, underneath that level. Because that should hold us, as we see here, to now accelerate, right? You could target equal highs, you could target the inefficiency. And this is what I mean when you don't even need to be targeting external ranges. Like if you're turtle souping, right, it's very easy to target internal range inefficiencies and liquidities and be profitable that way. To where all you really need is right this high here. That in itself, 10 handles. Say you didn't even want, say you need 5 handles. Well, that just takes you back to the new week opening gap, right? And you don't need to catch any of this in here. But yeah, turtle soups can be powerful if you learn when to anticipate them. Those are the best entries. Everything else is coming off of the back of a turtle soup. Right, and Michael himself has stated that. The best entries will always be the turtle soup. So right here, like this would be one that I would potentially try, to be honest. We're going higher. Right, the new week opening gap here. So this acts as kind of our higher time frame. We'll say PD array. So say you wanted to short this high, you would have to have stop above that, above this high as well. But no, fun little concept. Okay. Yeah, no problem, brother. What's that, honey? Oh, it looks good. Okay. Oh, you don't want them? Okay. Thank you. Interesting. Okay. Thank you. Perfect. Okay. Yeah, hopefully. Well, I think we'll wrap up this one here. I always say that and then something happens and I get sidetracked. I want to see if that new day opening gap here is going to hold us though. Because now we have equal lows here that can still be targeted, right? We have that volume imbalance too. Gotten back above this, however. Go to the 15. Let's see what kind of inefficiencies. A few inefficiencies up here. That daily volume imbalance level actually too. So, and the midnight. So I can actually see a return to this fair value gap here. This is where it'll be a little tricky because, so as we mentioned earlier, we wanted to see. Hold on. Well, this is kind of nonsense. We wanted to see a run lower into some of these untouched inefficiencies, right? The 1 hour and the 4 hour. We've hit the low of that 4 hour perfectly. The 4 hour has actually closed back above. Okay, look at that. So we held the 4 hour perfectly. So I think we could actually probably still come for this high. Like we say, we don't want to call tops. I think a lot of people may see this right now as a YouTube setup. This run higher, followed by this break in structure lower, leaving behind that fair value gap. It's valid to see that as a pattern itself. But to me, in my mind, narrative is still bullish. That's why, right, narrative will always outweigh price action in itself. So if I'm being honest, I would kind of look for expansion up and through these levels. Let me see. So I actually want to see us get above the new day opening gap. Get back above this fair value gap. If we get back above the midnight level, yeah, if we would close above the midnight level, I think we can fully reprice into this fair value gap here. So if anything, that new day opening gap really needs to hold us. I think if we get above new day opening gap, we get into midnight. Get above that, we get into the high of this, and then we keep kind of targeting even potentially this level here. He says, so, bruh, were you up or down today? That'll determine how you really feel about it. Hey, well, there you go. That's good then. Yep. I was like, if you're up, you're about to be hurt. But now it worked out. It was destined. Next stream will be tomorrow morning. We have, yeah, tomorrow, Thursday. We have PPI tomorrow, so another, not as crazy as CPI, but it'll be another pretty good one. Ooh, whoa. We have FOMC tomorrow. Chill out. I didn't realize that. So we'll do a power hour stream tomorrow. So we'll be here at 2 o'clock or 1 o'clock. No, it's 1 o'clock my time, which is 3 Eastern. So yeah, about 2:55 Eastern, I would say. Let all day play out. Which I totally forgot it was CPI. So we might actually hold this range. I wouldn't be surprised to see that. This highest high and this lowest low here. That may be our range for the day. A 5-minute sense, especially if at 10:30 we haven't ran any. So this will be our morning range. Oh, actually, it was 9:30 yet. 9:30. Oh, we're actually closed above that. But yeah, I still like the idea of staying in that range there. So if we kind of want to consolidate now that we've cleared highs and cleared some lows, we may consolidate back near this daily volume imbalance, because there's a lot of levels here, right? New day opening gap, midnight, daily volume imbalance, old daily high, end of fair value gap. So we may get something to where we play in here. I give a few false moves, maybe up and down, but don't really deviate too far in either direction. Yeah, lots of news tomorrow. So yeah, wouldn't mind that. If we did accelerate in either direction, I still would prefer actually higher. So but those are my two kind of biases. I'd like to see price, if we get above new day opening gap, continue into these inefficiencies here. If we start giving those consolidation signatures that we speak of, right? So kind of overlapping PD arrays, if we start going a lot of back and forth, seek and destroy, we'll understand why, and we'll wait until tomorrow. But I think that'll be all for today, everybody. We'll go one more time. Share really the only trade that we took. Let me go ahead and pull it up here for you. So we had, let's go back to the right screen. Bang. Boop. Just one. CPI. Don't want to do too much. We spoke about how if this wick gets overtaken here, that will set in motion lower prices. Because after wicking this low, right, hitting the midnight, hitting the old daily high and accelerating, we shouldn't have broken through that wick if we wanted to go lower or higher, excuse me. We first point out how we could anticipate that by taking the consequent encroachment of that wick. So closing underneath that already, leaving that fair value gap, we expected this fair value gap to hold us. It holds us well. We return into this one with the wick, but the bodies hold the lower fair value gap. We create now a breakaway gap. And when we close underneath this low, I don't expect price to return above that really, which is why I'm okay, right, treating this as a breakaway gap. So when we enter here, my stop, as you saw, was right above that swing high. But so ideally we wanted to get in right on the low, getting a little bit lower. I think new day opening gap. And stop was above this swing high here, which was the 30-second fair value gap. Understanding we have no need to return into this fair value gap here because we're underneath this wick low. Also noticing how as we broke through that wick, we're doing it with that fair value gap. So that's not random. But that's why I'm trusting this area. That's why I like this area to get short. We end up revisiting the actual volume imbalance. So go a little bit higher, but then reject aggressively back underneath the new day opening gap, engineering some sell side liquidity above our higher time frame objectives. So I don't want to get shaken out of the position here. Don't want to get scared as we see price trading higher like this. We're not expecting price to run out our stop because we've engineered the sell side. This run higher is simply to now pick up the equal highs and return into an inefficiency. That inefficiency holds us. We now break lower again. An area like this, where we don't expect this to offer us support. We expect this to become an inversion level. So we close underneath it. It offers us inversion a few times. And then ultimately, we deliver into our objective, which was just the 1 hour fair value gap paired with the sell side. So we had sell side here. That could have been the target. And then ultimately, right, we could have held for all of this, but we're fine missing that extended run lower. We're content with what we had here. So it'll just, yep, so fair value gap within an important low, right? If we're breaking through lows with new PD arrays, those areas become important to us, especially if it's already a predetermined area. Like we spoke about, if we break below this low, we already expect that low to now be resistance and for us to continue underneath it. So when we do it paired with that fair value gap, that's a high probability signature. That's why we trust that one going short, right? We're not selling. We're not scared of selling here, even though price is going lower, right? Some people may think we're already in a discount, so we're trying to sell in a discount. Whereas no, we understand we're under the midnight, right? The midnight, the new day opening high, the daily volume imbalances, those are premium. So we're still selling in a premium, targeting lower discounts. And that works out. As of now, just playing around here. But yeah, that'll be all for today. Oh, one more question. Why would you expect to have? Because CPI is more important than 930, right? You have to understand the news events. CPI will have a bigger role than the 930 opening, which is why, like in here, right, we don't expect much of movement. We just expect continuation of what's already taking place at 930. So we're already moving lower during CPI. That's the catalyst. That's the high impact news event. That's going to drive price into our objectives. 930 will just continue that delivery. So that's why at 930, right, we come back up into that fair value gap and continue to deliver lower. If there's high impact news before 930, you would expect price to run before that. And ideally only CPI and NFP. Other high impact news events prior to 930, I'm not too worried about, but if it's CPI or if it's NFP, we would expect that. But yeah, it's not a guarantee. Right, nothing's ever guaranteed. You can't say for certain. So if the market wants to consolidate, it'll consolidate. But we understand those signatures as well. So if it starts consolidating, we'll know that. I did this morning. That's what we're doing. Usually I don't care enough. CPI is a different type of news event. Right? Even though there's high news events, there's different levels of high impact news events. CPI in itself is a very high impact news event, which is why I get on before 930. Anything else, I just don't really care enough to do that. I like my sleep. And there usually is setups that form after 930, so. Yeah, 6:30. Or no, it would be 8:30 Eastern, not 6:30 my time, 8:30 Eastern. I mean, I've taken lunch trades before, yeah. I've shared some of those, targeting opposing liquidity. Yeah, no problem, biker. Right, the entry was just using the wick. Let me move this. So we spoke about how this wick here, if we break below that wick, we're going to go lower. We see how the bearish premiums are holding us. Right, we break lower. Breakaway gap here. There's a 30-second fair value gap in here that we were holding. So we're seeing how premiums are holding. And now we break underneath that wick. We broke underneath that wick with a new premium and close underneath the new day opening gap, closing underneath the midnight, closing underneath the daily volume imbalance, and closing underneath the previous day's high. At that point, we understand we have lower objectives to be met. This area here will hold us. It's a key level. So we enter on that fair value gap. Stop above the swing point inside this fair value gap here, right? No need to return any deeper. That holds us. We create some short-term lows, right? Consolidate, give a slight retracement just back into the inefficiency, into the original fair value gap. And then we get out at that sell side paired with the 1 hour fair value gap. Where's my time? Right here. On the, or what do you mean? You're asking like what time zone I'm in? I'm in mountain time. MST. Okay. Yeah, I usually talk in Eastern time just because it's a universal time. We're not all in the same time zone. Yeah, we'll probably leave that. Oh, go hit the gym. Do you do some sports? Yeah, I play golf. I did sports, I mean, most of my life. That's what I went to college for. Baseball in college. And then I graduated. Now I just golf. I play video games all day. No, honestly, usually what the day consists of. I do the streams, I trade, I get off, I edit the videos, I post them. I go to the gym. I come home, I make lunch. I play video games. And then I do it all over again the next day. If it's nice out, it's not nice anymore, so I haven't been able to golf. But on nice days, right after I'm streaming, we'll go golf. Then the gym. But besides that, I don't really do much, brother. I'm rather a hermit, they would say. Homebody. Got like 2 homies I hang out with on a regular basis. That's about it. What games? Fortnite, Overwatch, Rocket League, PGA 2K. I'm trying to get top 10 in the world right now. I'm like 40th in the world in PGA 2K. Your brother been grinding. Yeah, all bro. I've been a gamer my whole life, so that'll always stick with me. That's like a personality trait. It was there for me when no one else was. And trading just allows me to play more video games. Honestly, before I started this, like my usual morning routine was while I was trading, I would be playing video games. Then it would keep my mind off the things. It would let me just trade. Travel to Russia? Maybe. We don't want to travel. I don't know Russian though. I mean, I'm sure they know English. Russian. I'm black though. I don't know if they fuck with blacks out there, dog. I ain't seen much diversity up in Russia. All right, so yeah, we're consolidating around that point. Just bullshit now, but he said Afro American is crazy. I'm weak. What the hell? I'm in Wyoming right now. About to move though. I'm gonna be in Arizona in about 2 weeks, honestly. Next year, by January 3rd, we'll be in AZ. So. Sierra Vista, way south by Mexico. Mm. I mean, I guess yeah. I wouldn't say I'm a silver bullet trader, but if I don't get a trade like in the morning, like if I'm doing a normal morning where we start at 9:30, and I don't have a trade at 9:30, then yeah, I'll take trades between 10 and 11. So you could classify that as the silver bullet. Most of my entries will either come really within that first 5-10 minutes of the opening, right? If we have predetermined liquidity and the volatility injection shows that it's going to respect PD arrays, I'll enter then. If I'm not entering within the first 10-15 minutes, usually it's within that 10 to 11 window. as of late, I've started to enter a little bit more during lunch, which I was never someone that traded lunch. It's just because I wasn't comfortable with it, but as of late, it's gotten a lot more familiar with it. So if there's like an obvious trend and lunch is trying to target opposing liquidity, I'll take those as well. It's hard. I think it's because that's funny, but it's because I have short targets. I'm not trying to do too much, I think, to be honest. Like, right, a long time ago, a year, 18 months ago, like consolidations or even slower, we'll say smaller ranges, I was never able to trade because I was someone that would always try to target like external range liquidity points. Or I would be trying to hold for large moves because I felt as if I couldn't take trades. Like I wasn't confident in my abilities. So in my mind, I had to catch larger moves. That way I could make more. Whereas now, right, I'm confident in my analysis and my execution to where I understand I could make just as much or more with quick, more surgical scalps, we'll say, right? A lot of in and out precision than trying to hold for large extended moves. Which at times will bite us, right? Like here, say we would have held for higher time frame targets, those would have got met. We don't get a part of that. So it has its trade-offs for sure, but for me, I'm fine with that, right? As I often say, I'm content. I got that lower attention span. So for me, holding trades is just, I wouldn't say uncomfortable, just not my personality per se. Sometimes I will. But for the most part, if I'm in front of the chart, I like to be in and out rather quick. I'm glad you enjoy it, swimmer. Yeah, try to offer that. Right, as much as it is kind of giving my entries and exits at the same time, building your guys' own understanding. Just kind of walking you through my internal dialogue, what it was that I thought about or that I saw along the way, right? How you can read price. Because once you learn how to read price like this, well, then you could use really whatever model you want, right? If you want to be more like me, short-term scalps, you could do that. If you want to be someone that aims for higher targets, right, you could do that. If you want to use fair value gaps only, breakers, order blocks. That's the beauty of his things, is that once you really get fluent in it, it allows for a lot of personalization, right, to fit your own personality and trading style. Most important when these little PD arrays that don't seem to mean anything. Understanding which PD arrays will take place in the current price delivery, right? That's another big thing that takes some time. I think that's one thing that's been able to kind of separate me. But yeah, it's just time, right? Understanding which PD arrays are useful, which ones aren't. That's also why these concepts will never stop working, in my opinion. Is that he can teach all he wants. He can give you he's giving you a clear-cut model that prints money, right, in that YouTube model. But there will always be people who misinterpret the signals, or there will be people who just don't trust it enough to execute on it, or who bring their own baggage into it, right, that are trying to force trades that aren't there, or who simply don't understand overall narrative, so they're kind of caught off sides quite a bit. Like this is a perfect example here, right? I'm sure more novice ICT traders say, okay, look, we have a bullish fair value gap after clearing a short-term low. This bullish fair value gap should hold us, and we should return to target highs. Where they're not understanding order flow is already predetermined, right, established as bearish. So the higher probability setups will be shorts, not longs. Anytime we form discounts, we expect those to be traded through until we reach our objective. Small, achievable goals, very true, right? Nothing too crazy. Light work, consistent results. And I had the same mindset a lot of you had, right? Where I have to make millions, which you'll get there. Right now with the larger accounts, we're definitely getting there, but you don't need to do crazy amounts of trading to get there. The capital is more important. So right, if you can get very comfortable capturing 5 handles, 5, 10 handles, and quick moves, all you need now is more capital, right? You don't need to catch more moves to make more money. You just need to increase the amount of capital that you have. And that's where prop firms come into play. I wish I could be more precise already. Hey, it'll come, Ergon. It'll come. As I've often said, you see me now and it may seem like, oh, like I wish I could do that. It must be nice. But you don't see the struggles, right? The years I spent not being able to do it. Or the time I thought I did know how and just got burnt. So a lot of failures, a lot of time spent losing, a lot of lessons had to be learned. It's just a matter of time. You don't trust price fully, Anton. Okay. I feel you on that one. But that's where sitting in front, tape reading will help that a lot. So just sitting in on price, seeing it, paper trading. As I've kind of mentioned before, that execution ability is a lot different than the analysis ability, right? You can be the best analysis in the world. You could see the drawn liquidity. You could see the discounts that are going to hold us. But if you don't have the confidence to execute, it's all for nothing, really. Right? You're just the best forecaster with nothing to show for it. Honestly, I almost respect people that can blindly enter more than I do people that are overly technical. Right? Because then you enter almost an analysis paralysis, or if someone that keeps it simple, right, a mechanical almost strategy in a way. They have no hesitation to enter and they just trust their system. Even though it may not seem as pretty, it's more realistic, right? Makes money. I make it too easy. Oh, yeah, now you're just hyping me up. Chill out, chill out. It's hard, guys. This shit is hard. It's always hard. It just seems easy now because it was hard for so long. Eventually, it has to get a little easier, right? That was my understanding. I was like, man, if I keep at this long enough, eventually it'll make sense. It has to. Trust the process. Oh, Monsieur is rude dog. If we're bearish until higher time frame objectives are met, correct. And then neutral until a new objective becomes clear. Perfect. And right, if you've seen me kind of mention, like if when we target like kind of higher time frame liquidity points and we deliver into those, that's when I often say, okay, now we just need more price action to determine if we want to retrace back into a range or if we're going to continue. So once we hit those targets, you get a slight phase of really unsure delivery, or you're unsure of what the bias is, and that's fine. You don't always have to know what every move is going to be. Right? We don't need to be involved in every single swing. How to train to execute. So for me, what I did, paper helps a lot until a certain point, right? Paper helps you kind of understand the patterns, let's say. So once I got very comfortable with how these patterns will form and when, or until I got comfortable with that, I was on paper all the time. Right? Just building in those reps, practice reps. At a certain point, though, your analysis becomes good enough to where you trust basically what you're seeing. And now the next hurdle is the actual emotional kind of aspect of entering. So for me, what I had to do, right, once I passed that stage of learning how to execute on paper trade, I had to move to just the funded accounts. And now I've shared my story plenty of times where I've gotten funded and I lost the funded accounts because I was nervous to trade on them. It was almost like I was learning how to trade all over again for some reason, right? The emotions took over. I wasn't trusting the things I was seeing. So just like I mentioned, I would see the moves unfold. I wouldn't have the confidence to execute, so I would miss it. And then I would chase, forcing bad entries that would then run against me. So if you're kind of past the stage of paper trading, right, one thing I would suggest is either prop firm, personal account, but with the lowest, absolute lowest leverage that you can. All right, so go to like a micro chart that does like $1 a handle and enter one contract. And that's all you need to do. All right, get comfortable executing. And as you get more comfortable with it, as you build up that resilience, right, then you can up the contract, so you can up the risk to a point to where you feel that uncomfortableness again. And then that's how you know it's time to scale back. Right? If you kind of are worried about if the trade is going to go against you, that tells you that you have too much risk. Scale back the risk until you don't worry about the outcome, and then keep progressively going like that. And then eventually, you'll be where you want to be. And you're right, Brood Dog. And that's why paper, you need to be wary of it, because you don't want to go in here just full porting on paper, right? Because a lot of people have I guess it makes sense why they have the understanding that, oh, it's paper, it doesn't matter if I win or lose. Which, yes, that's true, but at the same time, you don't want to form bad habits, like you say, right? Going in or trading things that you're kind of just trading to see if it works because it's in a paper account. If you're really trying to get better, that's not what you want to do, right? You want to go in with the full intent that you're treating it like real money, right? So you're not recklessly entering or just entering for fun. I'm past stage of behavior, but not past. Okay, mechanical execution gives you better results, and that's fine. That's kind of the natural progression of it as well. Another issue that people can run into is they see people like Michael, or like even me, right? Some of you guys that follow me here, you see me using multiple different PD arrays or multiple entry techniques and think that you need to do that, when in reality, you don't really need to, right? If you're someone that has one simple concept that stands out, refine that and just bank on that all the time. Obviously, you can get to the point where I'm at here, where we can read price pretty consistently, candle by candle. But even when you get to that point, or to get to that point, you need to understand all the other concepts first. So like for me, Ergon, right? I would say mechanical to start out with as well, to where I would only trade like OTEs with order blocks. So if there was an OTE and it aligned with an order block, I would take it every time. So that's more mechanical. And then I trained to learn how to see the breaker. So then I would kind of trade breakers only whenever they formed, right? So more mechanical. But over time, as I learned the new concepts and got familiar with them, I started to see how they kind of overlap with one another, right? How they can be used in concert with one another. And I think most importantly, actually, I learned when we can expect them not to hold. And that's kind of more important. When you expect certain PD arrays to be broken, that protects us from losing trades as well. But damn, fellas. No, I enjoy talks like this. I think it's just as important, right? The psychology, the whole understanding, the inner workings of things, just as important as the actual price action itself. So being able to master that, understand that, right? The psychology of it all is huge. So I like talks like this. I think it's beneficial for a lot of people. Because past a certain point, right, you don't really need to learn any more about the concepts, just about yourself, how to execute on them. So we hold that fair value gap. So at this point, yeah, we're just going bullish. Like we said, if we get above that new day opening gap, we would expect price to continue. Get above it with that fair value gap that holds us wicking higher. But you can see how methodical this delivery is versus this, right? You could tell we're in a hurry to get somewhere here. We're moving. Whereas now we're just kind of, we're going up, but a lot slower, right? A lot more methodical with it, a lot more give and take. Journal long enough. For sure, journaling is huge. One day we might do like a little journaling thing. I don't journal like I used to back in the day just because I make the recap videos, which is basically my form of journaling. But I know for me, journaling every single day was one of the biggest factors that improved my ability to not only read price, but now to trust it and execute on it. Because I can go back in my journal and right, of course I have printed journals like this, a price action, but then also handwritten things where just explaining emotions and things like that. I think both are equally important. But all right. Putting the foot down. We gone. We got 2 minutes until we leave. For any last All right. Yeah, no problem, everybody. Thanks for sitting in. Thanks for sitting in. As we mentioned, a little longer break. We won't have any morning stream tomorrow with FOMC. I tend to sit out that morning anyways, especially with PPI in the morning. So high impact news in the morning. We'll let that kind of whole day play out. We'll let the FOMC announcement play out, and then we'll be back for Power Hour. So we will come back at what time? About 2:55 Eastern, I'll say. Maybe a little bit earlier. I'll send another announcement before we actually get on. But until then, have a good rest of the day, everybody. Stay safe. Hope you enjoy it. And yeah, we will talk tomorrow afternoon. Take care.